Stock market analysis and projections on the S&P 500. First, important information. Do read this slide. It shows you what our approach is to the markets and our analysis and what that means for you as you begin to apply it to your own work. Stock market, S&P 500. I'm going to look at the SPY, weekly and daily cycle analysis, and give you a peek at our market condition monitor. And I think you're going to just absolutely love the work. So let's take a look here as we switch over to the SPY chart. On the left here, you can see the weekly chart. On the right is the daily. We call this our side by side. Let's open up this weekly chart right here, and you will see the cycle analysis. For those of you that are brand new, on the bottom are cycle brackets. These express the ideal harmonics in the market. In other words, the heartbeat of the market, the way the market moves as money flows in and money flows out. We have our other proprietary indicators on here and some other work where we show support, resistance, and the momentum conditions. As you could see, this is our reversal scout. You could see during this period right over here, April, May, June, July, this was positive, and you could see that the momentum was really strong. Here's where it turned down. Now, these yellow ovals are where the periods of risk are. Now, I had talked about for the last month the likelihood of a repeat of these ABC corrections that you see right here, ABC, saying that that was likely to happen right there. And you can see, well, that analysis came to fruition as the market has moved down here. So right now we're in this period of risk where the minor cycle and the dominant cycle show outflows of money. That is where you get the corrective periods. And the supports come in right over here. So that support is right around 429 on the SPY, and then here at about 419, and then all the way down here at about 410. I would say that that's an extreme. There are still several weeks left to go before this corrective period is over. This decline here aligns with the daily cycle, which I'll show you, which comes out into late October. That's why you see these two vertical lines. This is the normal range of where the trough would be, the bottom of the decline. This extends a little bit further past that timing. And the reason for that is because what I'm going to show you on the daily chart. So this worked out exactly as expected. You can see the cycle rhythms in here, the dominant cycle, and then the two half cycles that you can see, 1, 2, 1 and 2, and this extending down over here into November. I want you to go to askSlim.com to the front page, click on workshops, and watch the free video if you've never seen our work, and you'll be able to start to understand our style of analysis and what really helps us to get a high probability in projecting both in price and time. And we are some of the rare analysts out there that do project out in time. So I want you to start to learn about cycle analysis. Now, after this decline period is over, we get into these rising phases, as you can see right over here. And that tells you that after that's over, you're likely to get a rally. Now, the rally could get as high as the last high right there into towards the end of the year. It could get beyond that if it got very strong, but based on what I showed earlier in the show with the conditions of the Fed pulling money out and a big disparity between the central bank holdings and the fact that we are in quantitative tightening right now, and the level of the stock market, which has gotten very out of whack. That says that it's not likely that you're going to get beyond this level in the next rally and may fall short of it later out into the year. And that would make this a selling opportunity because this comes out into the late winter, early spring, which could be another period of serious decline in the stock market. So we're concerned about this as a period of risk and believe this would be a selling opportunity right here. Let's take a look at the daily chart here, and you can see here the big cycle harmonic. That low points to out around October 30th, so that's the alignment. Now, what you're seeing here is the minor cycles and how that resolves up on the top. This is the slim ribbon. This is our momentum indicator that I like to use on the daily chart, and on the bottom, the slim ribbon PO. When it's green, it's positive, and these arrows show you momentum resumptions. Here it tried to get to the upside, but then neutralized and now has gone negative again. Now, what I want to show are the projections right in here. Now, there are 3 tracks of projections, and they're all really negative. The best one is coming up here and testing the 78.6%, which is very unlikely. Originally, back in this cycle, we said that 78.6% was a repair level, and if it closed above that, we would have to look hard at redoing our analysis and see what had changed. Well, it failed right over there perfectly, and then you could see began to come down here. Now, you see this low here and this low here. So far, this is below, and of course, it will remain below as far as the completion of this cycle goes, which says that it's very likely the next rally will fail in these resistance areas. The bold one with the arrows is the highest probability track. In other words, coming up here to the bottom 38.2 and then coming down over here and finding the supports around that 419 to 410 area down here. We had upgraded that, but then when this turns into a negatively configured cycle, it then warns us that yes, the worst case is it could get down here to about 410, which is very possible. Maybe getting down here to 420 is more likely, but 420, 410, that is really the range of our targets here out towards the end of October. The only way to change that would be if it was so strong that it got over that 78.6 there at 449. Now that's of course a little lower than it was over here because of this change of the depth of this decline, but that would then tell us that the strength of this big downward turn that you see right over here is not all that strong on the downside. So it would tell us to put a higher track in there and to expect less of a corrective period out here. But right now, the highest probability is that this will make some kind of a bottom right in here in these next couple days, rally out for some week or so, and then come down again. One more thing I want to show you here is a quick look at the VIX, VIX. We're going to look at how these cycles in the VIX suggested that the market had gotten too complacent. Here you can see right in here where that trough was supposed to be, as it made a low of 12.68 on implied volatilities. And that is a very, very complacent level. You can see anytime it got over there, the implied volatility started to go up again. And in this case, we expect IVs to get up much higher. Now, I'm only showing a test of this level right over here, but implied volatilities could easily get much higher there. If you look at the weekly, here you can see that this is the area we expected implied volatilities to bottom, synchronizing with the daily chart. I'll show you both of those charts side by side right here, and you can see that both of those lows came on the same timing, and that is what happens when the market begins to top and set up for a significant decline. I would not be a bit surprised to see mid-20s in implied volatilities out here into that October period. Actually, this could actually be drawn much steeper. Like this out into that late October period and maybe even get up into the 30s up there. So we don't really know. It depends on how hard the market gets sold, but it is likely that we're in a period of rising implied volatilities. And of course, on up days when the market tries to rally, IVs pull down, as you see happening here on Friday, but that's not likely to hold. And I think that this is indicating to us that the market does have a pretty sizable decline still to come out into that period of risk here out into late October. So rally days are to be held in suspicion, and we believe that that is the conditions that we have right now with a decline out into October. Again, go to askSlim.com, watch the free video in the cycle analysis workshop, and watch for a special we have coming up soon in the cycle analysis workshop. If you want to get kind of locked in on that, write to Matt at askSlim.com. Tell him you're interested on the special in the cycle analysis workshop. Here is our market condition monitor. And this is just an amazing app. Now, I showed you how level 4 if you sign up for level 4, you can get this premium app right here. And you can see the conditions right now. I'm looking at the short term there, which is for those of you that are swing traders, option traders, you're going to want to see that. And you can see the conditions right in here. IWM turned from slightly bearish. They all turned from slightly bearish in the last 2 weeks to bearish, as you can see in here, and that is for the short term. So we're projecting that it's going to really struggle for a number of weeks here. IWM turned bearish back on September 15th, so that was the leader, as you can see in there. So these conditions, these momentum conditions, are quite negative looking in that at the stock market. We have more than 115 of the widely held stocks and ETFs in this great app that you can see here. So if I take a look here at from short term to intermediate term, looking a little bit further out, you can see that these have turned to bearish to slightly bearish, though the QQQ, because it still has some positive readings on momentum and longer time frames, it is neutral. That is likely going to turn worse, but we have had some downturns from neutral to bearish and slightly bearish in the last couple of weeks here, even on the longer term. So this is not giving a great signal for the long term. And we have also what we call near term for short-term swing traders and intraday information on there also if you want to become a level 4 member and get this app. So just a fantastic app, and you can look at trade setup conditions from what is very bullish to what is very bearish, as you could see right in here. And very bullish we still see is EWJ, KEI, Tesla, and India, which has been very bullish. And here, if I go to very bearish, it's SIL, which is the silver miners, natural gas, PayPal, still very bearish, and LIT. So that's just the top 4 on both of those. Just a great way for you to understand the conditions of the market using this just unique app that we have developed, the askSlim Market Condition Monitor. That's it. That's our look at the stock market. I hope it was extremely informative to you and that you do take advantage of the specials that we are running. You can get this level 4 top tier special for just $99 for the first month. You will get everything that we put out there. So many lessons, more than 600 videos that we have produced on 12 different categories, including trader psychology and tools for techs, where I did 80 different videos on using different tech tools. There's so much I can't even tell you. So go to the askSlim website, click Learn More at the top of the front page, and that will give you a lot of the information, or write to Matt at askSlim.com.